23rd of January, Wuhan went into quarantine, and now at the time of recording so far, there have been more than 130 recorded deaths. Of course, we've seen an impact on financial markets. Oil has been one of the major markets hardest hit for a couple of reasons. China is the world's second largest consumer of oil. So again, a slowdown here is going to have an impact on the world oil price. Plus, of course, the impact this virus could have on the world economy. Any threat to world economy, oil tends to be one of the markets first hit. Then, of course, there's gold, traditionally seen as a safe haven in times of uncertainty or trouble. We have seen the price of gold tick up as some investors have looked for a lower risk destination for their cash. Earlier this week, we saw large falls, relatively speaking, on world stock markets. The US stock market, for example, the Dow Jones had its largest fall for around about 4 months. But not surprisingly, it's been indices and products related to China that have taken the largest hit. And China has suspended trading on its two largest exchanges. Let's take a look now at the historical effect of various viruses on markets around the world, going back over the last 20 years or so, and also catch up on these moves in these major markets and the Chinese markets and see what we should expect over the next few weeks. So we're going to go and take a look at all of these markets shortly and look at things in a bit more detail. We'll go through some of these major markets, see what the effect has been, and see what we can expect, and perhaps is there other trades to be done. But first of all, let's just have a look at this chart that Charles Schwab put together, really looking at some historical performance based on major epidemics in the past. You know, the worry was when this started in China, was it SARS? Was it going to be similar to SARS from the early 2000s? And you can see the effect. This is stock market performance we're looking at here. And really, I think the takeaway from here is that we may get the odd wobble, but actually, as we've seen a little bit in the last couple of days with the US stock market, these markets have bounced back. So if we have a look at SARS back in April 2003, I mean, coming into it, markets have been quite weak anyway, after the dot-com bubble boom into 2000, early 2000. So markets had dropped quite a lot, but looked like they were starting to turn around. We did see some volatility, but we did see the market push higher. Then we have avian flu, 2006. Markets were already trending higher and carried on pushing higher. Jump forward to 2009. We have swine flu. Again, you can see here, it didn't really have a lasting medium to longer term effect on the market. Various outbreaks since then, like the Zika virus here in January 2016. So overall, stock markets have managed to shrug these off. But of course, it all depends on how far it develops. Let's look at these markets now in a lot more detail. So here's the Dow Jones. Let's just focus on the price. We'll just remove the indicators for now. Look at what the price has been doing. We've seen an incredible performance in 2019 for stock markets. US stock markets up more than 25% through 2019. So clearly very strong coming into 2020, pushing out yet again to fresh all-time highs. Let's just focus on what happened in January. So we did see plenty of volatility at the beginning of January because of those military actions between the US and Iran. But markets recovered and pushed higher again, pushed higher still, with the Dow trading up above 29,000. And this is where we see markets spooked from about the 24th of January by the virus and the increasing severity and the reactions by various countries around the world. So at the beginning of the week of the 27th of January, stock markets hit really hard. You can see the Dow dropped almost 1,000 points from its high on the previous Friday. So we did see quite a negative knee-jerk reaction by stock markets. But again, linking it back to that diagram we just saw of historical performance, maybe we're seeing the same thing play out again. We are seeing markets clawing back a chunk of those losses. So far at least, stock markets appear to be behaving as they have done in the past. We see